Hello, my name is Wallace Acosta, and I will talk about a primordial financial metric for organizations, which is working capital. The main question for my research is why is the effective use of working capital important, and what impact can this have on the success of a company? The basic definition of working capital is the day-to-day money available to keep the company's operations. Working capital equals current assets minus current liabilities. The current assets is cash equivalent such as inventory and accounts receivable that needs to be turned into money within 12 months. Cash is also a current asset. The current liabilities are obligations that the company must pay within 12 months, such as accounts payables, wage, rent, taxes, and to have a positive working capital, the company needs to keep an efficient working capital cycle. For example, when the company purchases raw material inputs with their suppliers on credit, it needs to open an accounts payable. Accounts payable is cash that the company needs to pay to their suppliers within 30 days, 60 days, depends on the agreement. Then, after turning the inputs and raw material into the final product, the company will have inventory ready for sale. If the company sells on credit to their customers, an accounts receivable will be opened. Accounts receivable is money that the company owns due to their revenues, to their sales. The constant flow of the cycle will guarantee that the company has liquidity. Liquidity is enough money to pay debts, to pay the obligations. The company will have financial health and profits. In addition, they will raise efficiency in the operations. They will have more investments because they will have more money. More money, they will invest new technology to have a new production, new premises, so they will increase their production. Then, with all of this, they'll have a constant growth. On the other hand, this financial metric, working capital, considers only money aspects and forget recession. Recession is, for example, suppliers might increase inputs in raw materials, increasing the cost of sales. The company might have issues about inventory because they are not selling. The company might have bad debts. Customers are not paying due to recession. So the company also will have unsatisfied employees if they have change in the industry policy by the government. So they don't consider those aspects. They only consider monetary aspects. So that's the drawbacks of working capital. The working capital cycle for a business is the length of time it takes to convert the total net working capital, which is current assets less current liabilities, into cash. Business typically try to manage this cycle by selling inventory quickly, by collecting revenue from customers quickly, and pay bills slowly to optimize cash flow. I will give an example. The company purchased on credit material to manufacture a product. For example, they have 90 days to pay for the raw material. So it is payables day. Also, the company sells its inventory in 85 days. It takes 85 days to sell the inventories. The company receives payment from customers from their product sold in 20 days. So it is receivables. If you take 20 plus 85 minus 90, you will have 15 days it takes for that company to have cash, to turn all of this into cash. So that's its working capital cycle. Is the time it takes for the company to turn the receivables day into cash, the inventory, their product into cash, and the payables to pay their suppliers to turn into cash. In my methodology, I use the interview because it would be better to evaluate the results of my research. So I interviewed 4 senior managers from different companies. I used a qualitative research because in the interviews, I was looking for opinions, knowledge, and experience of the participants about working capital. I used primary data to conduct this interview. All of the questions was a primary data, and also the answers was related to their experience and knowledge. And the preservation of the interviewee's privacy, confidentiality, and anonymity was preserved. And also the communication with the interviewees was transparent and honest. All made by email due to the COVID-19, the restriction that we were facing. In the interview, the first 6 questions were about their general knowledge about finance. So first, they answered their current position. They talked a little bit about their business. And also I asked about the financial statements, if they knew what was the main financial statement for them. I also asked about the financial management tools that was most important to start up a company. I asked them what would be the focus for a company, for the management of a company, if it would be focused on cash or profit. And also I asked the main financial KPIs of the company, of a company. In this table contains the answers of the first 6 questions. So this is the third question about the types of financial statements, and all of the answered correct. Happy end, because the main financial statement is cash flow statement, balance sheet, and income statement or P&L. The fourth question, all of them had different answers. All of them was acceptable. They had good answers. When you start up a company, what kind of or what most important financial management tools you need to use. However, the participant D didn't answer like correct because business plan is not a financial tool. And the fifth question, which one is the most important, cash or profit? All of them answered profits, profits, and the participant C said higher management needs to be focused on profit, and low-level management should be focusing in cash and customer services because the participant D worked in a retail store, so it might be different for each company. In the sixth question, it was the main financial KPIs. So all of them had different answers, but all of them connected with each one. So really good, happy end. However, the participant did answer this question. The last 5 questions of the interview was all about working capital. So the first one was I asked the definition of working capital and its importance for the company. All of the participants, they understood what was working capital and they knew the importance for their company. They defined working capital as money available to keep the company's operations. So it was a HAP answer, HAP question. What actions would you take to ensure the client's invoice are paid on time? And if the client defaults on payments, what would the follow-up look like? So the second and the third questions were related to receivables. Again, receivables is money that the company it still doesn't have, but the company needs to work to keep the receivables, to turn the receivables into money. Because if they don't have a really good management of the receivables, they won't have money. And if they don't have money, they don't run their operations. The fourth question was I asked to describe a time where there was a working capital management issue and how was this addressed. So all of them had an issue with working capital, but only three of them answered. The last question was, what kind of strategies did you put in place to ensure a positive cycle of working capital? With the question, the report about this question was that three of them, they have future strategies to keep their working capital positive. But the participant D didn't show a good approach to have a good positive cycle of working capital. So I put no. The conclusions of my research is that working capital management is one of the key success drivers for a company. And if it is managed well, it allows companies to free up capital and invest in strategic initiatives. The optimization process is a must for top companies, but also it needs to be for smaller companies as well. The conclusion of my interviews of my methodology is that all participants of the interview have suffered from operation activities issues. Three of them could reverse the problems by applying efficient strategies that saved the company from more significant struggles. In consideration of participant D answers in the interview, further advice should be given to solve their problems with operations. The first three participants have the knowledge and strategies are ready to contain the unexpected situations that might arise in the future. For further research, more information working capital would help managers and employees to establish a greater degree of accuracy. It might be useful to investigate specific case studies for both professionally management and poorly managed working capital. It would be interesting as well to keep some proven results that could indicate with factual evidence its pros and cons. And it might also be useful to give more detailed information about what these factors could be and what impact they would impose. Thank you so much.